So although stocks have regained their collective footing, it's clear there are two dynamics at work right now. You've got this upside bias, but it keeps running into a serious wall of resistance. And, well, the big problem right now is a catalyst, and we need an uptick in volume. Now, despite the market's resolve, it appears that individual investors have begun to throw in the towel. This, according to the American Association for Individual Investors, bullish sentiment just hit a 2017 low. That was on May 18th, of course. That was the day after the 373-point drubbing for the Dow Jones Industrial. Now, it should also be noted that individual bullishness hit a recent high. It was a couple weeks after the election, November 24th. Bearishness, by the way, was at its low point at the time also. So investors are more bearish. The real deal here is that it's the uncertainty, and that's reflected in the spike of what investors are calling themselves neutral. They're not either one. This number is no doubt a proxy for some questions on whether or not the Trump economic agenda is going to happen, because right now it seems to be in perpetual limbo. It also appears that many people have sold in May and maybe gone away. This says investors have dumped $7 billion in equity mutual funds while picking up $8 billion in taxable bonds this month. Now, today, the biggest winners were financials led by regional banks. I continue to believe these are the most undervalued stocks in the market. By the way, everything changes if the major indices start to move to new highs, and that could happen before the jobs report. But again, we're going to need an uptick in something. I think takeovers and mergers could be the catalyst. Bunge, BG, and Brown-Forman both popped today. Scuttlebutt that each company has been approached by suitors. I also continue to stress being long a portfolio of great American companies, especially those that move earth and build factories and skyscrapers. For more help, go to my website, wstreet.com.